So joining us now with his 2 cents is business and market analyst and Newsmax contributor Seth Denson. Seth, good morning. We're going to start with the markets, as we always do. Now, we saw green across the board Friday with the Dow gaining 274 points, the NASDAQ and the S&P also landing in positive territory. Seth, what can investors expect this week?
You know, my hope is that this week is kind of take a deep breath. There's not any major earning reports going on. We know what the Fed already did. Stocks can kind of start to support it. The VIX, which measures volatility, isn't going off the charts. So my hope is that we have what we haven't had in a while, which is a not so erratic week in the markets. I don't know that we're going to see these vast jumps, but my hope is stability as we kind of start to move forward.
You know, Seth, speaking of stability, one of the things we've seen kind of ebb and flow, but mostly for the most part, increases national gas prices, which we did see a slight dip at $4.26, which is down 7 cents, so just over a nickel from a week ago. How can we get these sky-high prices under control, considering cutting off Russian oil is expected to raise prices even more?
Yeah, drill, baby, drill. That's the reality of this. If we really want to get prices under control, as we go into the summer months, gasoline prices tend to increase anyway. The challenge with what's going on in Russia and Ukraine is that there's going to be less available energy on the global market. It was announced yesterday that both Halliburton and Baker Hughes are pulling out of Russia. These are 2 major oil and gas producers. That's also, you know, on the heels of Exxon and some of the others doing so, BP and others. The reality is I was speaking to some folks out in the Permian Basin on Friday. That's the West Texas, huge oil area here in the United States. And what they're telling me is they're not putting new wells in. All the current wells are active. But they're just still hesitant because of this administration to start drilling because they just don't want to invest those dollars only to see them pull back. So if we really want to get serious about lowering gas prices long term, we need to depend on American energy.
And Seth, let's switch over to the Federal Reserve here because we know that they raised interest rates for the first time in 3 years, and that decision in response to the sky-high inflation. But there's 6 more rate hikes that are expected. What does this mean for everyday Americans?
Well, in the short term, I don't know that it means a lot. You know, if you're an everyday American and you've got some credit card debt, you may want to start trying to rearrange the decks on the ship a little bit and get that sucker paid off because those interest rates are going to be adjusting. You might want to think about, you know, if you're looking to buy a house and the markets may be a little bit tighter than they were in the past. The whole idea here, again, from the Fed is to reduce the amount of money in the marketplace. And that's what we need to do to get this inflation under control. But again, I don't see that it at a quarter point, which is what was raised, half point will be by the next. I don't see it moving the markets big time. I don't see it really halting inflation. The Fed is expecting us to get closer to 2% by the end of the year. We really need that to be higher. But at the end of the day, at 2%, I don't know that we get inflation under control. So to the everyday American, long way around the barn to get to your question. But I just don't see a lot changing, at least in the short term.
And is this related to the war with Russia and Ukraine?
Everything's related, right? Whether we like it or not, we live in a global economy, and all these things are compounding. When you think about food prices that are coming out of Russia and Ukraine, those going up. But we need to not lose sight of the fact that this inflation was off the rails long before Russia invaded Ukraine. We needed to do something about it. Some people, myself included, have been calling for 8 months now for the Fed to raise interest rates. We needed to do that. So this is a start. You got to take the first step before you take the second. So hopefully we'll start doing that soon.
Yeah, we saw this happening well before the war, including raising gas prices. But, you know, speaking of food, Ukraine is an exporter of agricultural products. And last year they exported more than $27 billion in agricultural products to the world. What effect is this going to have on international food prices?
Yeah, food's going to go up. When you start taking food out of the supply chain at the export level of Ukraine and Russia, let's not forget, Russia is a huge exporter of food, wheat, things like that. So, you know, combined, it's close to 30% of the world's wheat distribution and exportation. So food prices are going to go up, as they already were because of the inflation we just talked about. So buckle up. It's going to be a long ride. Start scrimping where you can and saving those dollars because you may need them.
Yeah, it sounds like avocado toast is going to get a little bit more pricey, but this time not because of the avocado, but more because of the wheat and the bread. Seth Denson, thank you so much for joining us this morning.
Thanks so much.